Alright, this is Nedi, your Forex coach. In today's video, we're going to be looking at the best time to trade Forex for maximum results. Okay, the best time you can trade Forex for maximum results. If you're coming here for the first time, we're saying welcome to our channel. And if this is your second time or you've been here before, we also welcome you and welcome back. Alright, let's move right into the show. The best Forex trading time windows that you can get. Forex market, of course, we know trades 24 hours every day from Monday to Friday. And in this video, we have identified for you the best time that you can trade the market for maximum results. Professionals trade markets, on daily basis, but they don't stay in the market for 24 hours every day. So you can't be a slave of the market. So you have to identify the times that you can go in, maybe 3 hours, 4 hours in a day, hit your daily target, and then you get right out and do any other thing you want to do. You can go to the gym, or you can go and play golf, or get engaged in some other thing. All right. And these times are the times that the volatility is high in the market, is highest in the market. Okay, you just don't want to put a trade and the price really does not move, it just stays there for a long time. What we have done is to historically look at the market and have come up with the best times that you can come in and take a trade and expect to have the market move straight in your favor. All right, so I want to just highlight here again about the major Forex trading sections around the world. We have these three major sections around the world. I said there are the three major sections. There are other smaller trading hubs around the world, but first, London section, and this section opens 8 a.m. to 5 p.m. GMT +1 on daily basis from Monday to Friday. And then the second section is the New York section that opens by 3:30 p.m. GMT and closes around 10 p.m. GMT +1. Then finally, the third one is the Asian section, which opens 12 midnight and closes 7 a.m. GMT +1. All right, so we have identified some time blocks that you can look into the market, identify trading opportunities. And another thing we have done here is that we have also helped you to identify some currency pairs you can trade at this time. So it depends on the time that is most suitable and convenient for you to trade the market. All right, so this first trading time is the 7 a.m. GMT +1. That's the pre-London market open. You see, at this time the European markets are beginning to open up, and this introduces some energy into the market. Volatility is seen to increase because the news of some Eurozone economic data are beginning to to be released, and they're being released at this time, and this will introduce some level of volatility. Okay, the current pairs to trade at this time are all Euro currency pairs: Euro USD, Euro CAD, Euro GBP, like that. So depending on where you see an opportunity this period, you are recommended to trade Euro denominated pairs. So let's move to the next time window, and this is the London market open 8 a.m. GMT +1. The UK stock market opens at this time, and this marked by a tremendous increase in market price volatility as a result of more traded volumes being introduced in the market. And London alone accounts for over 40% of FX transactions around the world, and this is the major reason why you have some level of increased volatility in the market, which every Forex trader targets that time window. When the volatility is high, you just enter the market within the shortest possible time. The price just moves either in your direction, okay, if you got it right, and then takes you to your profit zone. The currency pairs to trade at this time are all pound pairs and commodities such as gold and silver. Okay, so let's look at the next time window. This is the pre-US stock open, and this exactly is at 1:30 p.m. GMT +1. Historically, there's always a remarkable increase in volatility 1 hour before the New York market opens. This time window represents an overlap between the London session and the New York section, and many forex traders target this time. There is an added volume. London has added volume into the market over 40%, and now the New York section is opening up, adding more volume. You see, this time overlap, causes another increase. The volatility is increased at this period, and you would like to, this is the time period you wouldn't like to miss. You want to take advantage of and trade the market. And the currency pairs that you can trade at this time are all US dollar pairs. So you target US dollar pairs to trade at this time. Now, the next time window is the opening of the US stock market, and this happens at 2:30 p.m. GMT +1. Volatility is seen to further heighten at the opening of the US stock market. This event provides a good trading time window to professional traders as price action seems to become stronger. All right, you could see the market move as much as 100 pips in less than 10 minutes thereabouts. You see, so at the opening of the New York stock market, okay, there is an increased volatility again. So you may elect to take some trades around this time window. And currency pairs recommended for you to trade at this time are all major asset classes. All major asset classes, will be sufficient for this. All right, now the next time window is the 4:30 p.m. GMT +1, and this is when the European markets begin to close. Okay, at this time the markets begin to experience decreased volatility. You see, it's a time to expect some retracements in the European currency pairs. You may like to trade retracement at this time. So if you are traded maybe euro, pound, or you traded pound dollar, okay, and it has moved about 150 pips, all right, and maybe it has hit its daily range, okay, the average daily range, it has hit it. You can use the Fibonacci retracement tool at this time to trade some retracement, because the markets are beginning to close at this period. So there is withdrawal of volume. Most traders are closing, leaving their desks, so there is a decreased volatility in the market at this time. So the next time to look at is the close of the US markets, and this happened 10 p.m. GMT +1. Forex, daily charts at this time are seen to begin to close, as well as the US stock market. Traders are advised to stay away from the market, at this time, and use the time to, to review all their trading activities for the day, and also to begin to have some, market outlook for the next trading day. You see, market volatility is seen to be at its lowest around this time window. 10 p.m. when the US markets have closed. Of course, before now, the London markets have closed, the US markets have closed. Approximately 80% volume is withdrawn from the markets. The volatility drops from 10 p.m. into the opening of the Asian market. So we look at opening of the Asian markets from 12 midnight. Major Asian markets begin to open at this time. This introduces some volatility, into the Asian currency pairs and indices. The volatility is not as much as what is seen during the London and the New York, market sections. And this actually is very obvious, because the Asian markets do not contribute more than 20% of the total global traded volumes, okay, in the market. At this time, the only section running is the Asian section, the Sydney markets, and also the Tokyo market. London and New York are all closed, and volatility here, there is an increased volatility from that 10 p.m. when the London market and the US markets have closed, and this time by 12 p.m., 12 midnight, the Asian market is open. There is a slight increase in volatility, and this time you may decide or consider trading the Asian pairs, AUD pairs, JPY pairs, and then the New Zealand pairs. And this takes us right back into into the London section, the cycle continues. You see, what we tend to achieve to pass across to you in this video is, one, you need to understand these times when volatilities are highest, the time volatilities are at its peak, and time when the volatilities are low. So you can take advantage of the volatility, increased volume in the market, all right, by the major trading institutions, okay, when they come into the market to either buy or to sell. If they introduce some volumes, you see that particular asset class will the price will rally. If they withdraw huge volumes, it will result to negative volatility. The price of that particular asset class will just drop. So these are the things you need to bring into your trading, and to spice it up and give you more wins in the market. If you like this video made sense to you, like you to hit that like button, okay, and subscribe to our channel. Share this video with all your friends and make it the algorithm to work in such a way that many other people will have this video to watch. Thank you so much for watching this video. Again, I will see you in our next video.